Hey everybody, it's Jimmy Kerr from My Hometown Mortgage back for video 3 of our series on the loan process. Today, what we're going to discuss is the documentation. And the documentation is the paperwork that's needed for us to actually process your mortgage loan. Now, I've got a couple of different forms that I'm going to show you, and then I'm going to go through the different things and how it applies to any individual borrower that might apply with us. Now, with the documentation, it's best if we can get this information up front. It does absolutely help with the pre-qualification process and the pre-approval process. It also makes it easier and it's a little more exact when we're actually trying to approve you for your loan. So if you can get this stuff in up front, that's great. If you can't, most people don't, to be totally honest with you. We normally just do the application and then I send the documentation checklist out via email so that they know what to get at that time, and then they start bringing that stuff in. So as I go through it, you'll kind of know, just kind of know up front that it doesn't necessarily have to be given before application. Now, a lot of people who come in and actually do their applications, they will bring a lot of this stuff with them. But otherwise, most of the time it's done over the phone or via email and or on the website. So they don't bring that information in. All right, so kind of get into this. Now, it's kind of the joke around the office here that when it comes to documentation, you have to understand that they literally dot every I and cross every T, okay? I mean, it's pretty intense. 10 years ago in the heyday, literally if you had a pay stub, a W-2, and a heartbeat, we could get you a mortgage loan. What was hard back then was actually keeping up with the sheer volume of loans that we did. Today, we probably do half the loans and do twice the work when it comes to the documentation. So the running joke around here is this, that there will come a point, and you can ask every client that comes in here and does a loan that I have a discussion with during the pre-disclosure process. I always say this, there will come a time in this process. I don't care what you think about me. You may think I'm the finest fellow that ever walked. But there will come a point when the thought's going to cross your mind. If Jimmy Kerr asks me for one more sheet of paper, I'm going to drive down there to his office and I'm going to smack him straight in the mouth. And it happens to everybody. I don't care who you are and how patient you are. The paperwork is so intensive that you will want to choke me out. And you'll be wondering why you came to My Hometown Mortgage and Jimmy Kerr to get your loan. You'll be like, what was I thinking? But what I always tell people is when you get there, when you want to physically harm me for asking for a pay stub, you're almost done. You're pretty close to closing. And then if you ever see me get upset, if I ever actually get aggravated, then you're really close, because that means you should have closed a week ago and I'm having to call and ask you for some stupid piece of paper. So, but that has always been the joke around here, is that you will want to hurt us at some point because of the paperwork. Okay. So I've got two things that I'm going to show you today. First is our documentation checklist. Now, I will actually post a copy of this on the Facebook page, and I'll try to do it on the YouTube page as well. I haven't quite figured that out. I'm kind of new doing the videos. So see if I can figure that out. But these are on our website, and that's myhometownmortgageky.com. Again, that's myhometownmortgageky.com. You can actually go and see the documentation checklist. And then we also have what's called a welcome packet, which has some similar information, but it also talks about some of the things that you can experience through the loan process, kind of the do's and the don'ts, things of that nature. Okay, so let's kind of jump into the actual documentation itself. So first thing that you're going to see on the list is we need a clear, legible copy of your driver's license and your Social Security card. So ID and Social Security card, very simple. You do have, however, need to check and see what address is actually listed on your driver's license. Does it match your current address? The address that you provided on the loan application? Does that match? Or does it have your previous address? If it doesn't, if it has a different address than where you live right now, then you have to do a letter of explanation explaining that. Or you can actually go get your ID changed and get the current address on it, which is actually what you're supposed to do. But we can't take the letter of explanation explaining that you just hadn't had time to change it yet. So simple as that. So that's the first thing, ID, Social Security card. 2, we'll need your last 2 years tax returns, the full tax return, the W-2s, 1099s, and any other forms that come attached to your tax return. Now, if you have your taxes prepared by an accounting professional, that's usually pretty easy to get because it's all stapled into a nice little folder. If you use TurboTax or something, one of the online systems, then a lot of times people won't have their W-2. So let's be specific about what those are. The tax return is the actual form that you get back from your accountant when you file your taxes. It's several pages long, and it's all broken down. All right. The W-2 is what you actually receive from your employer that you take to your accountant or whomever to file your taxes. So we have to have both of those for the past 2 years. So right now we're asking for 16 and 17. Once we get into 2019, we'll be asking for 17 and 18. 1099s will be if you do any contract work that you don't necessarily pay taxes. It's not a W-2 job. A lot of times we'll get those for people who are retired. So for example, if you're a retired teacher, they get a 1099 at the end of every year for their retirement. If you're on Social Security, SSI, something like that, you generally get a 1099 at the end of the year that shows what you drew for that year. So 2 years tax returns, W-2s, 1099s, and any other attachments that may come with that tax return. Pay stubs. We require pay stubs that cover a full 30-day period. So if you get paid every 2 weeks, I'm going to have your last 2 check stubs. If you get paid every week, I need your last 4. So that means most recent check stub and the one before it. And then that's the one thing, really, that and bank statements are the things that we have to ask for the most because they do have dates on them and they expire. So depending on how long it actually takes to process the loan itself, that is something that you may have to provide a couple of times. So check stubs. Every 2 weeks, need your last 2. Every week, your last 4. If you are self-employed, if you're a self-employed borrower, then we get your tax returns, your personal and business tax returns for the last 2 years. So that's if you're self-employed. Tax returns, business and personal for the last 2 years. Okay. Let's move on to if you are retired or you're drawing Social Security, some kind of assistance, so to speak. You will provide your 1099s for the last few years. So I was talking earlier, like with Social Security, it's this big long form. It's crazy long, but you just need the top part. It's called a 1099. You'll do that for the past 2 years. So the way that it reads on here, you also need to have your most recent award letter. So if you're retired or if you're receiving Social Security, SSI, we'll have to have your most recent award letter and then your 1099s for the past 2 years. Then the next question is, do you receive child support? If you receive child support, then you have to provide a copy of the child support order. And then you'll also need to go to the child support office in your county and provide a pay history for the past 12 months showing that that child support is current and is being paid on time. So for child support order, and something from the county. There's usually a child support office in each county. It's where most people go and pick those up, and they'll get a 12-month history for that. Okay. All right, let's roll over to page 2, bank statements. All right, so for your bank statements, I have to have your most recent 60 days bank statement. So that's 2 months for all accounts, for all banks that you do business with. So if you've got checking accounts at 3 different banks, then I have to have 60-day statements or your last 2 month statements for all 3 banks. Okay. Savings accounts, same thing, IRAs, CDs, all that. I have to have a 60-day history for everything, for all banking accounts that you do have. All right, so, and again, that's as I was talking about the pay stubs, though it's probably something that you'll have to provide a couple of times. That definitely comes into play when we're talking about down payment, because we do have to document the down payment through the bank statements, and it is required 60 days. Okay, and that again is for all accounts. A full access letter. So a full access letter is if, say, I've got a husband and a wife, but only the husband is going to actually be on the loan and the wife's not. She's had some credit issues in the past, or for whatever reason, she's not going to be on the actual loan itself, but she is on the bank statement. then the spouse has to write a letter, whether it be the husband or the wife would write a letter stating that the other person had 100% access to all funds and all accounts that they hold jointly. So that's called a 100% full access letter. And it's just simply stating that the person that's not on the loan, that is on the bank account, is basically stating that the other person has 100% access to all the funds in that account. Simple enough. Retirement accounts, IRAs, 401ks, just any kind of retirement account, we have to have the most recent quarterly statement. So again, it's fairly simple. Retirement account, most recent quarterly statement. All right, so then the next question is, have you ever been divorced? And if you have, we have to have a copy of your divorce papers for as many times as you've been divorced. If you've been divorced 20 times, I have to have all 20 divorce documents. So basically, I have to have the divorce settlement along with the divorce documents that are signed by the judge. You just kind of read through the initial divorce documents and it'll tell you if there's a separate addendum for the settlement, and if so, I have to have both. And you can generally pick that up from your local, wherever the divorce was filed, you can pick that up from the circuit court clerk's office. They generally have that on record there. But that is required as well. Now, a lot of people ask me, why do you need my divorce statement? What's that matter? And it has to do with the child support. Is the estranged spouse, are they paying any bills on your behalf? I was trying to think what another example would be. It's that kind of information, though. We just got to make sure that there's nothing that financially impacts you because of the past divorce. And it generally has to do with kids and child support and debt. But that's what we're looking for there. The next question, have you ever filed bankruptcy? And if you have, that's okay. There are some rules with bankruptcy and applying for a mortgage. If you file for bankruptcy, you have to be 2 years past the discharge date before you can apply for the mortgage. So if the discharge date was today's November 21st, the discharge date would have to be before 11/21/2016. And if it was, then you can actually apply for a loan. If you had a bankruptcy and there was a foreclosure, you have to wait 3 years before you can apply for the mortgage. And that 3 years, it goes by when the property was sold by the master commissioner. So I had an odd deal pop up the other day where someone had lost a home in a bankruptcy and the bank never sold the house. And the bankruptcy was done like 7 years ago. And they just sold that house that was lost in foreclosure a year and a half ago. So I couldn't do the deal because I wasn't 3 years past the date of that foreclosure or the master commissioner sale. So that's one of the things that we do look at. So you have to think about that. If you have a foreclosure, how long ago was it, and when did that property actually sell from the master commissioner? So that is something you do have to look at. But on bankruptcy documents, we have to have copies of the entire bankruptcy document. And again, you can normally get that from the attorney that filed the bankruptcy for you. That's usually on record. And I've had some people have to go down to Frankfort or actually request the documents from Frankfort as well. So that is something that is required. And again, it has to do with those dates. Are you far enough past the bankruptcy? Was there any kind of financial ramification that you're still having to deal with today because of that bankruptcy? So that's pretty standard. Then the next thing on our list is, do you pay child support? So if you pay child support, it's the exact same thing. I got to have a copy of the order, and then I have to have something from the county attorney showing that you are current and showing what the amount is that you actually pay. And the reason we have to do that if you pay child support is that amount actually has to be documented into your debt ratio. So it is an actual payment. Just like a car payment would be, a credit card payment, whatever, that child support's looked at the exact same way. So we have to require the documentation so that we can accurately determine what that payment amount is and what you're paying every month so that we have an accurate debt ratio. All right, let's flip over here to the next page. And while I'm doing that, I'm going to grab a drink of water. So the next thing is, do you have student loan payments? And I would say that 95% of the people, especially the young folks that apply for mortgages, do. And we do, and a lot of people will question, well, why I'm not paying the payment yet? I'm still in college or it's in deferment, and I'm not actually paying that yet. Why do you need to know about my student loans, or why is that counted in the debt ratio? All the loans that we do require us to document a payment for the student loans to be included in your overall debt ratio. And that is because at some point, you may be in deferment now, or you may be on an income-based repayment right now, but at some point you're going to have to pay those student loans back. And we have to make sure that if those payments kick in, that you will be able to afford continuing to make your house payment, and that does not put you in a financial issue because now your student loans have kicked in and now you can't afford to make your house payment. So it varies by product on what the payment is, but normally what we're going to request you to do is get us a copy. And you can pretty much do this with all the student loan companies, where you can actually go online, and most of them actually have a form, applying for a mortgage, click here, and it'll actually document all the payments for us. And if it doesn't, then we actually have to use a percentage of the balance as a payment. And that's pretty common. And that does cause issues sometimes, I'm not going to lie, because people are living their lives based on and paying their bills based on not having to make that payment because they're not right now, and don't really think ahead as far as, hey, in 5 years, I may actually have to start paying this. So we're going to do that for you. And that actually is a big part of what we do when we actually determine debt ratio and you have student loan debt. So we're going to ask you to go to the website, pull something to show us what the actual payments are, so that we can determine what has to be used as the payment calculation when determining debt ratio. So that's a fairly common thing, and that does kick some deals sometimes, I'm not going to lie. Or folks can't buy the house necessarily that they want, maybe have to buy a little cheaper house. But it is something to think about when you're applying. Do you currently own property? If you currently own another residence or a piece of property, then we have to document the homeowner's insurance, the tax bill, and the payment for that property, and include that into your debt ratio as well. So we're going to have you get us a copy of the deed to the property, because we're going to do a title search to make sure there's no lien showing up. We're going to have a copy of the tax bill so that we can determine monthly what that needs to be, how that needs to be calculated so that it can be put into your debt ratio. Same thing with the homeowner's insurance. And if you're going to sell that property in the process of buying the new home, then we have to have a copy of the listing contract for the house that you're selling, and we'll have to have a copy of the documentation once the house actually sells. So that doesn't come up a lot. Most people, when they're coming, as I said in one of the other videos, they're calling me because they don't own any real estate yet. So that doesn't come up all the time, but it does come up, and when it does, there is documentation that we have to get. Okay. Signed borrower's authorization is something that we will have you sign either when we do your pre-disclosure package, or we'll actually email it to you and go ahead and get the signature. And we use that to obtain your verification of employment. So not only do we actually have to get tax returns, W-2s, pay stubs, bank statements, all those things, we actually send a verification of employment to your employer to make sure that all that information matches up. So we will get a borrower's authorization signed, and that allows us to do that on your behalf. And we don't have to call you every single time we're trying to, update something or to document something. And it does come into play when we're getting bank statements and things like that as well. So signed borrower's authorization. If you are buying a property, now if there's a realtor involved, the realtor generally takes care of getting all this information. If it's a for sale by owner, then we have to have a copy of the sales contract. There are seller's disclosures that have to be completed. We have to have a copy of the deed to the property, and then we really like to have a copy of the current tax bill so that we can estimate what the taxes will be when it's your time to pay, when you own the house. So that is something that we ask for as well. In a refinance situation, we're going to get a copy of your current deed, tax bill, homeowner's insurance as well, because we have to have that information to document debt ratio for the house payment, and we can actually give you a little more detailed house payment. So that is kind of the documentation checklist. Now, most of that stuff is pretty basic. It's things you would probably think about needing when applying for a mortgage loan. The part where it gets fun and where you're going to want to kill us is when we send all this documentation into our underwriter, and I'm going to do a full video just on the underwriting process itself and what you can expect. But when we send it into the underwriters will rip this apart. They rip it apart and they try to find a reason to turn your loan down. Now, they're not actually trying to turn your loan down, but they're trying to find if there's anything that might cause a problem. And if they find something, they send us what's called a stip sheet. And we contact you and say, okay, yeah, you brought all this in, but now underwriting wants to see this, 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 and this. And it happens on almost all of them. And people are like, well, what can I expect? What can I expect? What will they ask for? And the answer is, I really don't know. They come up with some pretty random things at times. It's pretty frustrating, but normally there's a good reason why they're asking for it. And we try to determine what that reason is. And then we'll ask you for it and have an explanation for you as well. All right. So let's talk a little bit about this, our welcome packet. And it does kind of what these videos do, but it's actually in written form, and you'll have it so that you can actually read through it when you have time. But, it basically talks about the application, the pre-qualification, documents, verifications, appraisals, some of the things that we're going to do some additional videos on. It talks about the submission, talks about the credit report. And I haven't done that yet, but I'm probably going to do maybe a video later about the credit report and just kind of discuss what we're actually looking at on there. And then it's also got the do's and don'ts. It's like, don't change jobs. Don't change banks with your bank accounts during the middle of the mortgage process. Don't be out buying new trucks and furniture. I always tell everybody, do not walk into Big Sandy Furniture. I think they have facial scanners that pulls your credit when you walk in. And because that stuff creates problems. Literally, when you apply for the loan and we start collecting documentation and we're actually now working on the loan, you are financially frozen. You do nothing new, okay, until we finish and close the loan, because I don't care what you do, it will come up. I've been 2 days from closing, and I've had a guy go buy a truck that the new payment shot his debt ratio over where I could get him approved. And I was 2 days away from closing the deal. And they're like, well, how would they even know? Well, they check. They will do a credit refresh before you close to make sure there's no new debt, no new medical bills, no new nothing. I mean, basically that nothing has changed. And that happens right before you close your loan. So, can't do that stuff. No large deposits. I mean, and I'll get into that too when I talk about the down payment at some point. And when probably the next video I'll do about the loan products themselves, the different types of loans that we do. And I'll probably talk a little bit about the down payment as it applies to some of the specific products. And we'll talk about the deposits, because a lot of people don't understand, but they think if they've got cash, mattress money at their house, that's good enough for a down payment, and it's not. It actually has to be in a bank, and it has to be seasoned for a period of time. So those are some things we'll get into some more detail on. And again, this is just a bunch of different stuff in here. There's the different types of letters of explanation that we have to do. We'll do a lot of those actually while you're applying as I'm doing the loan application, kind of like that full access letter we were talking about. Sometimes, like if you're married, and the wife has a maiden name, we have to explain that was your maiden name. It's just random little things like that. Literally, you'll dot every I and cross every T, and it will become incredibly frustrating at some point, and you'll want to smack me in the face. That's just how it goes. So that's really, from a documentation standpoint, that's what we've got for now. As I said earlier, I will try to post these on the YouTube page as well as the Facebook page, so that you'll have paper versions where you can actually pull them up and look at them. And then the next one I'll do, I probably won't do till next week. I kind of wanted to get these 3 knocked out because it's really kind of the beginning process. If somebody's looking at applying for a mortgage loan, okay, number 1, you got to call us, right? Number 2, we went over the loan application. Here's the kind of information that we're going to ask. And 3, if you're applying for the loan, what kind of paperwork do I actually need to see? So that all kind of goes into the first stage of actually applying for the loan. Okay, so that's why I wanted to do those 3 first. The next one I'll do, as I said, will be probably on the loan products. That one will probably be a pretty long one. I know this one's ended up being, it says here, like 24 minutes, so it's a pretty long one as well. But so I'll let you be for now until the next one. My name is Jimmy Kerr. I'm with My Hometown Mortgage at 3780 North Mayo Trail, Suite 201 in Pikeville, Kentucky. Our office number is 606-432-6832. If you guys would do me a favor, please share and like this video on Facebook and Twitter or wherever else it shows up. And also please go to the YouTube page and subscribe to the channel, because we're going to do a lot of things, a lot of fun things with this as we go forward that I think will be informational and it'll be great for people. So go to the YouTube page, subscribe, and like there as well. And we really appreciate it. So until next time, Jimmy Kerr, My Hometown Mortgage, and we'll talk to you real soon. See you later, guys.